One.
And we're back. Monday morning.
Welcome back.
What day is it?
World Traveler. I know you don't even know what day it is.
May 19th.
You traveled the globe this weekend.
Yeah, my world travels to Omaha, Nebraska.
Look at you.
Which was great. I don't mean that in any kind of demeaning way. It was fantastic. But yeah, it did feel like longer than it was. I only missed Friday, and I did, for anybody watching that is in the Tasty Trade universe that has to do with my future, I was checking in on emails and chats and everything else.
I believe the 63rd day of PTO this year. So it's a generous
63rd.
schedule you negotiated.
Well, thankfully, the new year is about to renew.
Right. Then you go back to 70.
Okay. Yeah, perfect.
Yeah. Why bother? Don't even come in.
It did feel like a long weekend, though. It's only an hour flight, but I will say this, because it's an hour flight, no one gets up, and there is 30 minutes of BS before and after the actual flying.
Yeah.
And so, like, I've never from a flight had to pee more than getting off of that. Like,
you got to get to the airport an hour early. You got to go through the bullshit. You got to wait and everything. You know,
and I have a coffee. I sink a coffee like right before, like I get through security. I grab a coffee. I've got like 20, 30 minutes to boarding. I sink the coffee, and then I get on the flight, and I'm like, okay, I'm feeling good. I'm feeling good. Like the first part, we get up in the air. I'm, listening to podcasts, whatever, and then like by the end of it, I'm like, oh, I'm gonna pee my pants, and then like the seatbelt thing goes on, and he's like, we're starting our descent, but the descent is 30 minutes, and it's like. So I can't get up, and like.
See, you're a rule follower. I would have definitely rule broken it.
I know. Having traveled with you, I know you would have broken the rules. And I thought about it. I even thought like when we.
What are you gonna do? Pull out like a
trust
taser?
Trust me.
You down and
my mind went through all of the iterations. We land.
Greg's going to airport jail.
We're still like taxiing, and obviously like no one's allowed to move. But at that point, I'm like.
There it's hard to get.
I'm literally like I'm going to have to go into the bathroom at this airport and pull out dirty pants from my trip and replace my pants because I'm gonna pee on this flight. And it was like unbearable. Like I couldn't, like I was walking to the bathroom like hunched over because I thought I was gonna like I don't know. It was awful.
So I saw a picture.
But the trip was great.
You went and did some shooting.
We did. So my buddy who already there was also like a funny dichotomy of my friend, really good friend from college. We both were in the same program. We've remained really good friends.
Major of math and small animal. Okay.
He didn't do the animals.
Okay.
He just did the math.
Obviously not with the guns. So,
yeah. And so, but he got married. He had like you and I have been talking about with my life.
This was a bachelor party.
He got married at the end of last year, and he and his wife just had their families in New York. He does very well for himself, but the idea of having a wedding in New York with like friends and family and all this stuff, the cost got so large that he was just like, I don't want to do this stuff. So he got married last year. We had the bachelor party. This most recent weekend. Oh, we got to replace mics. Uh-oh.
Here we go.
There we go.
Spectacular.
That'll be better for everybody. So there was a funny dichotomy of like, he's already married, but we're on this bachelor party. And so like, when certain nefarious things happen, they're supposed to happen before you get married. Wow. But it's like, well, he's already married, and here we are. That being said, I didn't go to any of those nefarious activities, so I don't know exactly what happened. I got to pull. This is a prime weekend for being sober because you get to just be like, it's like 10 or 11, and you're like, oh man, like you guys are going to the strip club. I'm sorry, I don't feel like I would really enjoy it. I'm kind of tired. I need to go home.
You made it to 10? I usually have.
I made it to 11:30.
I'm usually back in by 7:45, 8 o'clock at the latest.
11:30. I'm sitting there like falling asleep, listening to people drunkenly tell stories about whatever. So I made it pretty good. But yeah, we did this like there's 12 of us. We went to like a shooting range because he loves guns and whatever. And we didn't just like shoot gun. You scared me because you were like, oh,
Well, that's what
my
they did.
son did that.
That's what they did in Vegas, where they had all the wild. You could take an AK-47,
Yeah.
or whatever.
And I was like,
Uzi.
oh man, like I don't want to. And someone else on the trip, I was telling him about what you had told me about that, and how like they're putting all this ammo in front of you, and then like at the end of the day, it's like, oh, here's the bill. It's like $3,000,
Right.
and it's like, oh man. And so I'm talking about that, and my one friend was like, oh yeah, like if you do that in like Vegas or certain
Right.
places, like they'll take you like out to the middle of nowhere, and like you can like shoot what are those things called, like a grenade launcher or an RPM, whatever
An
that
RPG. Yeah.
like
Rocket
and
propelled grenade.
blow up like a car or something like that. And I was just
I
like,
can only imagine what they're going to charge you for that thrill.
I could not imagine. But no, it was really great. This guy just like this like former cop or whatever in Nebraska.
So you shot targets indoors.
He set up a course
Oh, nice.
in the
Yeah.
range, and so yeah, there were like, I don't know, maybe 10 targets, but you have to like move with a Glock. Is that?
Yeah, but my brother-in-law does that. It's tactical shooting, where they move from spot to spot, and it's different situations.
It was cool. So
Yeah.
it was timed, and then based on what part of the target you hit, you would, if you hit it like in the like chest here, there were no seconds added. But if you hit it like here or like out here, they would add like 3 or 5 seconds. If you missed it, they would add 5
so
seconds.
are you thinking about strapping up now?
Absolutely not. I'm thinking about watching Sicario again, though, because it was, and I will tell you, there were like 2 or 3 guys who shoot, I guess, like regularly,
Yeah.
and they got like the top 2 or 3 positions. Me, number 4.
That a boy.
Moved through the course, and the best part of it, I beat Spencer, the bachelor, that my best friend, who he hates losing in anything. And he was the one who wanted to do it. So that was like all I ever wanted
How
was
does
to
an
beat him.
inflatable guy hold a gun?
He's real. These people were all real.
Okay, we'll stick with the real.
Omaha Steaks. I don't know if you've ever heard of this.
Yeah.
Very good. Very good.
Yeah,
if you
they're
go to
very-
Omaha, you should probably eat a steak.
Yeah.
It was very good.
Look at you. And either you go 30 ounces or you don't go at all.
It was like it was a classic 12 dudes, pretty much all work in finance. And so it was like Spencer trying to be like, all right, let's just order like this. But of course, like one of them gets like 2 Manhattans, and it's like, actually, we need the seafood tower and we need this and whatever. And so like it was a classic case of like, by the end of both dinners, we have literally like, I don't know, like probably 100 ounces of steak still sitting there.
Yeah.
And like
Nobody can pack it.
hundreds of ounces of mushrooms and potatoes and all of this stuff that everybody needed. That sounded like a good idea. It was, but I will say, yeah, I got like Delmonico. Have you ever heard?
Yeah.
It was unbelievable. And everybody tried to get cute with the like, oh, I want the green chimichurri or whatever. Bernays with the Delmonico. It was,
See? There you go.
it was unbelievable. I felt amazing. And honestly, I didn't eat yesterday until 5 p.m. and I like, not a problem, because I put that thing down and it was unreal. So yeah,
Well
if you
done.
go to Omaha, the
Good for
steaks.
you.
What did you have a steak this weekend?
I did. I had a steak on Friday. Yes. Not an Omaha steak, just a regular, like, a public steak. So, I can't go bougie like you.
It is funny. They did try to, and I steered us away. They almost got a couple of guys in our group.
On the Wagyu stuff?
Well, no. It's not even Wagyu. It's like, well, so like here are steaks, and they're like
how long
65 to $80. No, here's this one. You've heard this one before, I'm sure. But for $150 or $200, we have these cuts from this ranch that's 11 miles away, and like no one gets any beef from this ranch. Like this is the beef that goes to like this one French Laundry in San Francisco. Like this is the only beef they only send beef there. Like it's half, like Wagyu. It's half this friggin' thing, and it's $200. And they're like talking about this. The woman that's serving us was great. Was talking it up, and of course the guys are like, "Oh man, like I feel like we got to get some steaks from that ranch." And I was like, "Guys, we just learned about it 2 minutes ago. We don't have to. We absolutely don't
There's not
have to get the
a
steak.
sense of beef urgency at this point.
Well, because it's like, of course, like if you were really into steak and you went to the restaurant we went to because you knew that they had had cuts from this ranch, I would get it. But it's like she just told us about it, and like we don't care, and you're all drunk. So like let's just get the $75 steak. How about that?
Wow.
But it was fun, man. It was a goofy time.
Good
People
for
are
you.
so weird. What has been going on? Our credit
look at
rating
you.
is
You leave
screwed.
one day and the wheels come out. I mean, obviously, with you out of the office, Moody's was very uncomfortable.
Did Moody's check in on us while I was gone on Friday?
Yeah, and they said 63 days PTO, credit downgrade for the U.S.
So tell me. So let's bring up the platform to take a look at the prices because they're a lot lower if you're holding U.S. dollars. What happened?
This came out at
over the weekend?
3:45 our time in Chicago. So futures were still open. We were still open. tastyfx was still open. SPOOs got sold off about 60, 70 points. Bonds got knocked down 1.5 points. And again, which I am not the conspiracy guy, but bonds were getting sold all Friday, really hard. And nothing else was really moving. We really had a relatively quiet Friday afternoon.
Can we hold on the bond piece for a second? Because I want you to explain this because honestly, I lose track of this sometimes, which isn't like, oh, Frank's a genius. But having traded
Really? You
bonds,
tell me that every day.
I should probably know this better. When in a textbook, when there's a sell-off in risk-on markets like equities, they tell you that bonds are a flight to quality and tend to move higher in price and lower in yield.
Right.
This is a particular scenario where they're directly saying, yes, there's fear in the overall market, but it's stemming from the fact that the credit rating of the U.S. is now lower and we have less faith in the U.S. servicing their debt, paying back this debt.
Yes.
Bonds move lower on that move because if you have a worse credit rating, the theory with that is you should have a higher interest rate.
Exactly.
So can you kind of lay out with the move like last night, what is happening? Because some people might look at SPOOs down 70 and say, hey, bonds should be up a point.
Right. But as you would think, there's everything from AAA, which the U.S. used to be, down to A, B, double B minus. These
South
are
America, which isn't a shot at South America,
No,
but just
but
historically not good
traditionally,
debt servicers.
that is a rating of the likelihood of, you're absolutely right. All things taken aside, the likelihood of repaying debt. And a lower credit score would imply a lower probability of the principal being, and again, what's a bondholder's risk? Well, they're guaranteed an income stream for a period of time. Now, that could be below the prevailing market rate or higher than the market rate, but the key thing that you want as a bondholder is you want your interest rate paid, but you want your principal
You want your money back. Yeah.
And the idea that there is less likelihood of you getting your principal back, and again, keep that in context. You're talking macroeconomic. That would command a higher interest rate. So you're asking the person who is taking the bond from you, giving you cash, to assume more risk. He's going to want to be compensated by a higher interest, right?
Sure.
So it's very basic. That's what it's saying.
If I have one friend who's an investment banker and one friend who's a guitarist, and I love them equally, and they're both equally talented, the one who's a guitarist would probably have to pay me a higher interest rate if they were both to borrow $1,000 from me. That's essentially the same, but with central banks across the globe.
Right. And does that mean, I think it is the idea of that with the budget they're floating, whatever creative math they're doing, they're going to have to borrow an extra $5 trillion.
Okay.
Now,
Sounds like a lot.
if you think that, sure, nobody's defaulting in the U.S. The U.S. government isn't going to default, but then becomes the question of, okay, there's a market price for everything, whether it be crude oil, currencies, your home, and that's dictated by supply and demand, and that's what the market does. It sets a an equalized value between supply and demand. If you're telling me that there's going to be, over a short period of time, 6 trillion more bonds that have to be sold to finance the U.S. government, that means there's more supply coming on versus what currently exists as demand. And traditionally, in other words, if you drove up to a car, an auto dealer's parking lot, and he had an extra 100 cars on trailers, you would think, okay, this guy's got to move some cars. Prices are going to come down. But
it's not necessarily that this car is going to fall apart when you drive off the lot.
No, it's just the price at which you're going to get for the car.
Gotcha.
And it's the same thing here. There's more debt coming. It means there's going to have to be more people interested in buying. At what price are they going to be buying? So the market is, again, has this bill passed? No. Has any of this debt been issued? No. What they're anticipating, what the market likes to do, is price in that effect immediately.
And what you're seeing in the Forex space, because now, okay, that was great.
Different animal. Because now we're breaking the context of, well, you guys have been talking so long about this difference in interest rates between the two countries is one of the great drivers. And you would think, okay, U.S. rates are moving higher.
Moving higher today, yeah.
Long-term rates are moving higher.
Sure.
Short-term rates are unchanged. So currencies are usually more impacted by short-term rates, not long-term rates. So this is a little bit of a different animal. And when you think about this in terms of if higher long-term rates, which have more to do with corporate borrowing and the formation of capital for growth of the economy, rates are going to be higher. That could put an extra damper on economic growth. That then impacts, okay, how many dollars do I need if the U.S. is not transacting that much? So we see a situation where the dollar actually falls in value, even though interest rates are higher in the U.S.
And here you have that short-term rate story. And as you can see, I of course love the distribution. This is for December, so end of the year. Expected about 50 bips lower than where we currently are. Is that right? Yeah, we're currently four and a quarter.
That was, if you go down and look just a week ago, that distribution was dramatically different.
Well, actually, to your point, in the last week, it has been relatively similar, edging a little bit lower, so it's up a little bit. If you go back, a month ago, it was much lower amid the fear and selling. So we'll see where it goes from here. But to your point, most of the action probably in the 5 to 30-year range in the Treasury market. And when you bring in the Forex piece of this, not the same as what we've been talking about with interest rate differentials, because the kicker to interest rate differentials when you're looking at that, especially if you're trying to measure, boons to 10-year treasuries or BTPs or whatever, when you're looking at the equivalent of treasuries, which is different than the overnight interest rate set by a central bank, you have to factor in the risk or the rating or whatever you want to say, because of course you get down this list here, Pete, and you go into maybe the emerging US dollar pairs, and you might see some of these currencies that have much higher interest rates, but have much different risk factors involved in those regions. For example, the dollar peso in here, to be short dollars, long peso, it's like, oh man, that's a really nice overnight rate that I'm getting paid to be long pesos. Well, that comes with inherent risks. Whereas in this section here, among these pairs, it's often thought they're all pretty equivalent. And so those interest rate differentials, people look at it with a magnifying glass. But when something like this happens, when a credit rating is downgraded among these UK, Japan, US, Euro area, some of the commodity currencies, whatever, Switzerland, it's almost like a foundational shift, like a re-level setting of like, okay, the US rates might be higher for 10 years than they are in the Euro area, but now the credit rating is lower there.
Yeah, absolutely. And I think you highlighted that great. Mexican rates appreciably on top of U.S. rates. And that's partially to hold the currency in place. But it is it is one factor of many that go into currency valuation. Now, the other thing too is euro was down sub 112. We were well below, we went out Friday at 111.40. Remember, the lower end of our 115 to 111 range. So this is also the market's reaction. Would we have the same reaction if we were at 113.5 or 114? I don't think so.
Yeah, it'd be hard to say. And so this is all I think, great context from Pete.
I think what it does highlight is that, this just reinforces this idea. We've talked about this a lot. The range is no longer 105 to 110 in the euro. It's somewhere fishy, sloppily around 111, back up to the highs. And there's some interesting trade to be. You have to adjust your lens from what it was last year to what it is, or even the beginning of this year, to what it is now, accept the range. And I think it goes back to does this mean I'm buying euros because, the dollar is going to just collapse? No. But what it does say is that we may have been selling 111s and 111 and 50s on the way up. And those were a great trade when they traded back to 108. But now we accept the new range and we're not afraid to look at trading, what I always say, both sides of the market.
Well, and just to put a bow on the theory part of the conversation here, it's translating to U.S. dollar weakness.
Yeah.
For all of, again, it's so hard. I always bring up in history class where it's you're studying whatever war, and it's what was the reason for the war? And they want to say it was this one thing. They killed the Ferdinand guy, whatever. But it's really 30 things. Isn't that his name?
Yeah.
But it's really it's always so many different things.
It is.
And so right now it's translating to higher rates in the U.S., lower equity prices in the U.S., risk-off sentiment pervading abound, and U.S. dollar weakness for a multitude of factors. Diving into that U.S. dollar weakness, I am surprised to see that among these pairs, the weakness is really gravitating in this euro-dollar pair, where I would have expected dollar-yen to be up 100, 150 points, only up 65. And this euro-dollar, even though it's given back about 20 points in the last hour here, Pete, up 100 points on the day. To your point, we went out at the end of last week below 111.50 after trading above it for the majority of the week. So a dip going into the weekend, and then a big rally on that last 15 minutes actually going into the weekend. Like you were saying, maybe a little bit of some of that news kind of coming to market right before the market closed on Friday. Obviously, we open lower in equities, higher in euro dollar, whatever market you're looking at the start of this story, but then throughout the European session coming in here.
It's right at that 1:30 time window when the UK came in.
Huge move.
You saw a pretty big move. So this is something we continue to see Sunday nights too, as Asia takes a bite at it. Then once Europe and the UK come in, they tend to do a little bit more damage. I think what this gives us as traders is more elasticity in all these things. We're back
100%
into the range. 100, we talk about, do I take my one standard deviation move from the opening here at 112.5, or do I take it from where we opened at, let's just say 111.70, or from the close Friday? We're almost at two standard deviations of movement right now. So a big move. Going to probably see some interesting back and forth today. I think this is another one where we're getting outsized movements back into a relatively healthy range, because we sat in a range when we were down at 105 that was 22, 23 pips a day. We're getting 100 pip ranges, which is great.
It's great to see. And to your point there, when you come to the platform and it's like, oh, we're already at a 1.5 standard deviation move, what do I do? It's up to whoever. I would say whatever you usually would do in a situation like this. For me, when I was, professionally trading and also like when I dabble here and now, it's to me a matter of like, okay, well, if I'm a contrarian and I wanted to be short into this move, maybe to start the day, I would put on a little of my size, maybe like a quarter unit or a half unit or something like that, short, and look for another one standard deviation move or something throughout the U.S. session.
That's
Same
exactly
thing,
right.
flip it for a trend follower. I would be obviously long, looking for that.
Well,
and
we took a day to get back to the middle of the range. That's where we are at 112 and a half.
It's a huge move, and so this is all to say I wouldn't necessarily look at this and be like, oh, well, the U.S. market hasn't opened yet, so I'm going to wait for another 50 or 60 point move in the U.S. session.
Yeah, and when we look at 7 o'clock, U.S. market is open.
Exactly.
Clock's ticking right now. It'll be interesting to see if they can hold on to the bulk of this move or it gives back a little bit of ground. They tried it a little bit higher right into London lunch, which is 5:30 our time in Chicago. It'll be interesting to see if we base build from this and we start to take a bite out of 113, or if dollar yen starts, we see something sub 144. But there's lots of interesting
I was going to say,
here.
Yeah, last thing before we get out of here is just make sure to look at the dynamics between some of these U.S. dollar pairs among the major currencies, because, you're seeing Aussie and Kiwi both up appreciably. And it's almost the risk off kind of like safe haven currencies like your Swiss franc and yen are actually kind of lagging behind.
Yeah.
I wonder if at some point amid this news story as it develops this week, that dynamic flips. There's something weird about that to me right now.
Right.
We'll watch to see if that flips. But
they actually had bigger moves, Swiss and yen, safe havens, right at Sunday night.
that would make sense.
The euro just didn't do much.
Yeah.
So now the other side of the coin is playing through. But yeah, keep 60 cents in your mind. That's been the rejected high in Kiwi for a long time.
Oh, whoops. Yeah. Right. If we can, and this is now we're talking about this week.
Yeah.
If there's a continuation of this story, or if the price action continues to be volatile,
Yeah, but
I would watch
even
those
this market
dynamics.
gives you some great setups because if this does pull back a little bit, you're still picking up congestion at the bottom of that 58 to 60 cent range. If you're looking for the dollar truly to weaken up a little bit,
Yeah.
if you really feel this is way overdone on nothing, which you can argue to an extent, it's just stating the obvious.
Mm-hmm.
If they need to borrow more money, it's going to cost a little bit more for them to finance it. What's the long-term effect on the dollar and the economy? Not much. Then maybe 113.5 is an interesting level.
It'll be fun to see
Yeah.
how it develops, but you'll have to get that from Tom, Tony, and Vanetta coming up next. Stay tuned, and thanks for watching. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastyfx. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more.